Good morning, guys, and welcome to the Camp Financial Stock Market Update. So I think that I found a schedule that I like. I think I like doing it every other day, doing these videos. So we'll plan on videos coming out Mondays, Wednesdays, and Fridays for the time being, and then maybe as we dig in further, get further into making this kind of like a career potentially, and the the finance part of helping people and people asking questions. It helps to spur on content for this show. So so as we get more questions, we'll start to dig more into those and then at that point in time, maybe it becomes gives us a reason to do day-to-day video. But as for right now, I think every other day is good. We'll just kind of focus on the market as a whole, and any other things that may come out that could be impactful. So let's take a look real quick. So I actually have not looked yet this morning, but Nike came out with earnings last night, as well as FedEx. So I mean, we've got a couple pretty big players that came out with earnings last night. I'm going to go ahead and while go through the first part, I'm going to work on getting Nike pulled up to see how their earnings came out yesterday. Let's see what we got, and what we're looking at as likely open for Nike and FedEx both as well. I think pretty important. Like I said, definitely very important stocks. So Nike during the day yesterday rallied 1.85%. and in the aftermarkets it's up another 2.26%. For those of you that have been following following the market for the last year, Nike has been what we consider a dog of the Dow, but their earnings did beat this time, and so maybe they are righting the ship. I'm trying to get the 1-year chart pulled up here to give you the exact amount, but it doesn't look like that's going to happen. So that's good. Let me go back to my other screen real quick. And look up Nike there, and that'll give us the 52-week highs and lows. So Nike hit 52-week high in mid to late March, around $64. It looks like. Let me see what the 52-week high is here. $67.39 is actually the 52-week high. So it must have hit that even prior to March, but I see right around $64 back in March. At that point in time, and then it started to really started to sell off, drop below its 200-day moving average early in April, and from there, so the 200-day moving average is right around $60. From there, it dropped all the way down to about 48. Started to come back, and it's kind of bounced up around. It crossed actually above its 200-day again for looks like about 3 days, maybe 2 days. Right at the end of August, right around $60. At that point in time, it sold off pretty hard, all the way down to below $50. And now at this $51.79, and it's probably going to open around $53 today. I want to take a deeper look into Nike, see if it makes sense at 53 bucks a share. I mean, its PE multiples and stuff are, I mean, it's high, but it does pay a 1.39% dividend. I don't know for a fact, but I'm pretty sure that I'd heard that they have been buying back stock, or that they have a stock buyback program. So, you know, that always helps the investor as well. Well, it lowers the float, which should theoretically help the investor. It doesn't necessarily help the investor, but so that's Nike. Let's take a look at FedEx. FedEx also reported last night. Let's see what their earnings look like, what we're seeing from them in the pre-market for today. And while that's pulling up, let's go ahead and take a look at the heat map for yesterday. Financials again performing pretty well. Not so much in the banks this time. There was investment brokers did real well. We had Goldman Sachs, which is a bank, but Morgan Stanley, Charles Schwab, all performing pretty well. Some good performance in the internet information providers, Google, Facebook, pretty much flat. I'm trying to see which one this is that there's one in there that was up about 5% yesterday, and I can't tell which one it is. Like I said, a lot of pretty flat numbers. Citibank was up 2% yesterday, which is pretty good. Again, we had already talked about Nike. I see it as green. Carnival, the resorts and casinos, Carnival and Royal Caribbean Cruise Lines both performed real well yesterday. Department stores, Macy's, Kohl's performing well. The railroads performed pretty well, and actually, while we're in discussion on the railroad there, or since we've went to that route, I did go long a smaller railroad company yesterday. Its ticker symbol is GBX. That's the Greenbrier companies. Pull them up real quick. So I went long, and pretty much right at the price where it's at, $43, and I think I'm in at $43.79. It's trading at $43.85 is what it closed at yesterday. If you take a look at the chart, it's been absolutely on fire since Trump was elected. It's up from $30 to $45. I mean, it's a 50% move in a month and a half. So I may be buying late into the rally, into the party here, but looking at all of the all of their fundamentals, I think the company makes sense. It's just a matter of where their earnings go in the future, as to what kind of impact we have. So everything looks good on it. I mean, they've got $8 per share in cash, and they're paying an 84-cent dividend. So we've got nothing to be concerned about there. They got plenty of free cash flow. I mean, their free cash flow is at about $6 a share. So again, they're going to easily be able to pay that dividend. It's just a matter of what a company that size actually could be bought out. With as small as they are, they're $1.25 billion. I mean, obviously CSX and some of the other large railroad companies could definitely come in and scoop them up. So NASDAQ, so let's go back. So FedEx, on the other hand, did not have a real solid report. Their profits were squeezed this quarter. Looks like they're going to come out overnight down about $7.50 or almost 4%. So they've got some pressure on them based on based on costs for delivery. So we'll see if they start raising rates on their delivery charges. So I think that's it. Let me jump back to the heat map, make sure I didn't miss anything. So a few pretty good red or green yesterday in the healthcares, Celgene, Biogen. Praxair was down pretty big in the basic materials. Again, you've got a fair amount of red, even to down in the independent oil and gas. Utilities basically flat, like we would expect. Industrial diversified machinery, it looks like General Electric's finally starting to get a little traction. And I think that pretty much makes our way around the board today. So if you have any specific stocks you'd like me to take a look at, I'm looking for another one to do a good report on for January 1st. I know last year, I don't remember if it came out January 1st or if I wrote it for December 1st, but Aflac was the company we wrote about in January. It was trading, or like I said, I think it was February or December. So let me go back here. We'll pull up the 2-year chart. Well, I'm not sure my system's gonna work to let me pull this up, but there it goes. So in December of 2015, yeah, that's what. So it was coming down, and it was actually, I think when I wrote, gosh, it might have been around December 1st. So when I wrote, stock was around 65 bucks a share, and it pulled back to 58. And I actually mentioned on there, maybe to sell a $60 put option, I believe was how I had discussed getting into it, or a $65 option with a target of seeing it hit somewhere around $74, $75. I don't think it ever made $75 this year, but it got pretty darn close. It made $74.50 is the 52-week high back in August, and now it's kind of flattened off. And maybe that's what I need to do. Maybe I need to go back in and do a little more research on Aflac and see where I see that going this year. This first year I mean, that's all an educated guess, right? I mean, you can guess where you think the market's going to go, but it's again, that's all it is. It's a guess. You're just trying to figure out where you think it's going to end up. So maybe that'd be a good one to go back and take a look at. And then the other one that I wrote about and I wrote about this one back in July, and it has really benefited from the Trump rally. That's Tower Financial, or Tower International, their auto parts manufacturer. So I was talking about them around 22 bucks a share. I felt like it'd be a good buy up to 24, and it ran up through 24 in early September, came back down, and I put a 20% stop loss on everything at the minimum. So it dropped back down to just under $21 before the election, and now we've rallied all the way to $29. And this is the company that I felt, and I still feel, is definitely a little over a $30 stock. So I've got those two reports out there on my website. Maybe I'll go back and, like I said, take a look at those and do a new write-up based on where the company is at today. So that's it for today, guys. Take care, and we will see you next time.